Now we have MCQ 30 again on clubbing provisions. Mrs. Shivani, wife of Mr. Anurag, is a partner in a firm. Her capital contribution is rupees 5 lakhs to the firm as on 1st April 2022. That means as on the very first day of the given financial year, which includes 3.5 lakhs contributed out of gift received from Anurag. That means out of total 5 lakh, 3.5 lakh is coming from husband as on first day of the year. Remaining 1.5 lakh is her own. The firm paid interest on capital of rupees 50,000 and share of profit 60,000 during financial year 22-23. This 60,000 is exempt under section 10 clause 2a. Share of profit from partnership firm is not chargeable to tax. It is exempt. A firm will also not get deduction and partner will not be taxed for this. The entire interest has been allowed as a deduction in the hands of the firm. Share of profit is not taxable, but interest from firm is taxable. However, how much interest from firm is taxable? Only that much interest which is allowed as a deduction to the firm. And it says entire interest has been allowed as a deduction to the firm. That means entire 50,000 interest will be taxable. Now the question is, in whose hands will it be taxable? Which of the following statements is correct? A, B, C, D. So first of all, total interest is 50,000. 50,000 is the interest on capital contribution of 5 lakh. How much will be clubbable and how much will be taxable in the hands of Mrs. Shivani? The answer in this particular proportion. 3,50,000 received from husband. So 35,000 will be proportionately be taxable in hands of Anurag, will be clubbable, and 1.5 lakh proportionate interest on 1.5 lakh will be 15,000. This will be taxable in the hands of Mrs. Shivani, and this 35,000 will be clubbed in the hands of Mr. Anurag in that ratio which is applicable as on first day of the given financial year, 1st April 2022, and on 1st April 2022 this is what is the position. If you recollect, in clubbing provision chapter, towards the end of the chapter we had discussed that while applying the clubbing provisions of section 64 subsection 1 clause 4, explanation 3 will be applicable. According to explanation 3, if asset is transferred without adequate consideration to spouse and the spouse is investing in either any business or is investing in a firm as a capital contribution, only in case when it is invested by the recipient spouse in business or the recipient spouse is investing in a partnership firm including LLP as a capital contribution as a partner, then only this rule will be applicable. In what ratio clubbing will be done? So income from business or interest from firm, which is 50,000 in our example, multiplied by value of the asset or value of money transferred by transferor Anurag to transferee Shivani as on the very first day of the given financial year, which is 3.5 lakh, divided by total amount invested in business or the total amount of capital contribution of the transferee in the firm as on the very first day of the same financial year. The numerator and the denominator will be 5 lakhs. Numerator and denominator both should be as on very first day of the given financial year, that is as on 1st April 2022. So 3.5 lakh divided by 5 lakh, 50,000 into 3.5 lakh divided by 5 lakh, the answer will be 35,000. 35,000 will be clubbable in hands of Anurag. Which of the four answers would be correct? A, B, C, D. Answer C will be the correct option. Share of profit is exempt under section 10 clause 2a and interest of 35,000 is includable in the income of Anurag and interest of 15,000 is taxable in hands of Shivani. Our answer is C. Let's check what's Institute's answer. Institute's answer is also C. Our answer is correct. Now this MCQ comes to an end. See you in the next video with the next MCQ.